622 on your Wednesday. The stock market has slammed down the last 3 days after flirting with all-time highs. With the election and coronavirus cases rising, a pullback seems likely. We've got Mike Reeves with Strategic Wealth Designers joining us this morning to discuss if or when you should time the market with your assets. Mike Reeves, good morning.
Good morning. How are you?
I'm well, thank you. Well, let's jump right in. How do you know when to be in and when to be out?
Well, there's a number of old sayings, but one would be, it's time in the market, it's not timing the market. It's incredibly difficult to do that. There's no free lunch. But let's just say you gamble and you sell everything right at the top and then the market falls. Here's the problem. When do you get back in? It falls some more, you feel good about yourself, then it finally starts to bounce. Oh, it's going to go back down. Then it moves up quite a bit. It's too high. Finally, you end up getting back in a lot of cases above where you sold. It's just not a sound strategy.
Now, a lot of people fear post-election reaction could be negative regardless of who wins. So will the market be unfazed, or do you expect it to be volatile after the election as well? There's a lot of uncertainty about that now, but what about after?
Sure. I mean, there's going to be volatility here. However, nobody knows for certain what's going to happen. There are fears about the election. Obviously, you're probably going to see it fall some more, then rise, go back and forth. Just very difficult to know. You really just want to prepare ahead of time. You want to have more of a blended approach, not all your money in the stock market. You want some at risk, you want some completely safe, and then you want some that's liquid 6 to 9 months worth of bills. If you have some safety nets under your portfolio and not all your money in the stock market, you're going to be better able to deal with the volatility here.
And, speaking of that safety net, should investors move more to cash, or are there any other safe options out there that you do recommend?
So the way you understand that is you build a sound financial plan, and the cornerstone of that financial plan should be a stress test. A stress test, it's kind of like when you go to the doctor. The doctor puts you under intense physical activity. You kind of feel like, oh no, maybe they're trying to kill me. Well, we want to do that with your portfolio. We want to run a stress test, expose how much risk you're taking, and then the investors can decide for themselves if they need to reposition that. We do that for our clients to help protect them. We're more than happy to do that for consumers. If they want to come in, they just bring their statements and we can run that stress test, and they can be better prepared for difficult times like the times that we're going to have here in the near term.
And really quickly, Mike, we're almost out of time, but you often talk about the importance of a financial plan built for retirement, for your nest egg, regardless of what's going on in the world. So just separate that. How do you position clients to do that?
Well, you want to use the rule of 100 as you're getting, within 10 years or in retirement. Rule of 100, you take your age. That's the amount of money that you should have in safe investments. When the stock market falls, those investments don't fall. And then you take 100 minus your age, and that's the amount of money that should be at risk. By taking some of the money and protecting it, you're going to have a much better chance of success in retirement versus being in a position where you could lose 30, 40, or 50%. And maybe this time it takes a long time to come back. So use the rule of 100. That'll help protect you.
Great advice. As always, Mike Reeves with Strategic Wealth Designers. Thank you. We'll talk to you again next week.